Hey folks, Dan Frio here with some breaking news this February 12th, 2026. So we had initial jobless claims and they came in right at point. And the reason why that's so important is the Federal Reserve's been cutting these things because of the jobs market. So with a healthy jobs market, what's going to go on with these things and why? That's what we're going to talk about in today's video. Another thing we're going to talk about is, did you hear yesterday they said home affordability is at a 4-year high? So I'm like, okay, how can that be? You might be a little shocked how much people are really saving with these lower rates. So a little confused on what's going on today? Well, folks, my name is Dan Frio. My goal is to explain to you guys, if you're a homeowner, home buyer, you could be a realtor, loan officer, what's most likely going to happen to these today and why? So the first thing I want to talk to you guys about, well, here in a second, is home affordability. It reaches a 4-year high. So why? What really breaks down these numbers? I'm going to get to that in a second. I'm going to have some calculators for you as well. But let's get over to today's economic news that will be shaping the markets. And we're going to start out with the initial jobless claims. So the initial jobless claims came in this morning, and I'll just say they were on point. Last reading was 232,000 people were unemployed for the month. And this time it was 227. So we're going to say that's a little bit better than expected. But then we want to look at how many people go into the market and find jobs. Well, it's looking like it's okay as well, because last reading we had 1.84 million people on continued claims. It only went up to 1.86. That's still a healthy jobs market. So this is giving us thumbs up when it comes to the markets right now, the economy. But good news on the economy is usually bad news for mortgage rates. So let's go see how the markets are faring today. And let's see here. Here's the bond markets that we follow each day. So folks, those are conventional loans and these are government loans. All you have to do is look at the numbers up there, and all you have to understand, if the number up there is going up, if it's in the green, it means mortgage rates are getting a little bit better. If it's in the red, it means mortgage rates are getting a little bit worse. So both mortgage programs are getting a little bit better today. Let's go over to see how the stock market and the equity markets are doing. It is a Cinderella story. Here's what I call a Cinderella story. Dow Jones, S&P, and the NASDAQ are all up. We have oil down 64. Okay, we're down below 65. We have the 10-year Treasury dropping. Let's see if it's a parfecta here, or whatever you call that stuff. Crypto, we have crypto up as well. So we got a perfect scenario behind us. Let's get over to what the Federal Reserve is going to do. Now, let's just break this down real quick. If you're on the Fed, you control that rate over there. Okay, you look at inflation, they look at the PCE and other numbers. We're going to get tomorrow the CPI, consumer inflation. They're expecting it to kind of stay steady. We'll get to that in a second. But then the unemployment rate came in yesterday, the new one. It went from 4.6 2 readings ago to 4.4 at the last reading. Yesterday it went down to 4.3. So the Federal Reserve is sitting here saying, okay, we have inflation. Okay, the tariff thing's still coming down the pike. So we don't know really where these tariff things are going to come with the Supreme Court. And then the employment numbers are looking pretty good. So then you have that coupled on a great GDP. That's saying the economy's kicking it right now. So if you're on the Fed, you're like, okay, why would I cut rates? Well, exactly. I'm on that bandwagon as well. If you go over to the Fed Watch tool, this tells us, well, what's the Fed expected to do in 34 days? This was at 90%, then it went to 80%. I think yesterday it was like 70%. Let's go over to this over here. It is 94% chance. The Federal Reserve is not going to cut rates at the next meeting. This might go to 100% after tomorrow's CPI number if it comes in a little bit cooler. So tomorrow what we're going to get on the economic calendar is right down through here. We're going to get CPI numbers. That's consumer inflation numbers. We're going to get 4 readings tomorrow. And there, let me break it down for you. There's going to be month over month. You're going to see right at the top, it says core CPI. Okay, this core means they strip out food and energy like gas prices and things like that. This is giving us a month over month reading. They're saying it was 0.2. It might go up to 0.3. I'm on this bandwagon. Remember the January effect? Well, it's floating into February. So January, I said it's going to be a couple months. So you might see a little bit of an uptick in the CPI numbers when it comes to this. Also, oil's been up above $60 a barrel. So we might see the CPI going up as well. So these numbers might be flat to maybe a little elevated. They're saying it might go down a little bit. We'll just have to see where these numbers come in. So these numbers tomorrow will play a big role in these things over here, and that does make an affordability issue. So let's get over to see, is housing really affordable to more people? Well, let's look at the numbers, and then I'm going to give you a calculator to show you, if you're a homeowner, how much can you save? And then later this evening, I'm going to have a live event for homeowners, home buyers, realtors, loan officers. It's going to be 6 o'clock Central Time. Come out and join me. I'll be on Rumble and Twitter and all all these events and ask any questions that you have. But let's break this down, and I'm going to come to a calculator here for us in a second. Mortgage rates in 2023, in October they peaked. In September is when the Federal Reserve, September 2023, the Federal Reserve cut rates 50 basis points. And 2-3 days later, well, within a couple weeks, rates jumped all the way up to the highest levels that we saw in decades, 8.2. So if you're in that range, please refinance. But where we are today, 6.15. So what this is helping people do, if you're looking to buy now, it's a $560 difference. Fantastic. Think if you're looking to refinance, our average customer is saving $500. But you go down through here, home prices, yeah, they're helping us as well. They didn't drop like a lot of people expected. I said home prices are going to be flat as a pancake over the last few years, and I was right on point. Over the 2021, 2022, hopefully you bought back then because you have sitting on great appreciation. If you are, again, refinance. But home affordability, property taxes, and homeowners insurance are affecting a lot of areas. So check your area, because if taxes are stable, insurance is stable, you have home prices that are basically stagnant, and you got mortgage rates that are low, and I think this is kind of where the bottom's going to be. So if you're trying to figure out how much savings you have, go over to some tools we have, and we have these things down below as well. So if you're a homeowner, here's a great tool for you. So let's plug in an analysis of a client. Let's say you bought in October of 2023, the worst case scenario you could be in. Well, let me get my head out of the equation so you can see the numbers. No, you can actually see the numbers right behind me. So let's say you have a $400,000 mortgage. Your rate's 8%. Remember, we bought it the worst time. 30-year term, you took it out and you closed, and your first payment was due January of 2024. Well, let's say you want to refinance right now. Okay, so we're going to refinance. Let's say the costs are going to be $3-4 grand. Let's go $4 grand. Okay, you're just looking to do a rate and term. That means we're just looking to flip that balance into today's rate at 6.1. Okay, what would your payment be? Well, let's go up through here. You'd save $500 a month, and you'd recover all your costs. You'd have a break-even point of 7.8 months. Dave Ramsey says anything under 2 years is a great number. This is great. Well, here's what I ask a lot of clients, and this might be a stupid question if I asked you this. Are you comfortable with your payment? Yeah. So why are you looking to refinance? To save interest? That's a perfect answer. So let me go down. Let's say you're saving $500 a month, but you're like, Dan, I'm okay with the payment. Well, let's do something, a good steward of your money. Let's go down here and say, okay, I want to apply all that to my new payment. Click it. Now you can pay off your house. Let's move this over here just to make sure we're in the right calculator. So let's go through here. We want to take all of our $511 a month and apply that to this. Look at this. If you keep the same payment, you'll pay off your house in 15 years. 15 years from a 30-year term. Check it out. These savings are huge for a lot of people. And if you're looking to buy, we have calculators down there for you as well. So folks, let's get over to see where we think things are going to go today. I will have that live event later this evening, but right now the bond market is, I'll just say it's flat as a pancake. Stock market is, wow, Bitcoin's up. Let's see what the other markets are doing. They're doing pretty healthy as well, and we got oil down. So I'm giving today a thumbs up in the markets. So if you're looking to buy, you're looking to refinance, I'm going to give you some guidance. My name is Dan Frio. I'm the host of the Rate Update, and here's our website. I'm also a licensed mortgage loan officer, licensed in all 50 states as well as Puerto Rico. I have the slogan, and I created this thing. It's one application, one credit pool. We're going to compare your loan with over 30 different lenders. How? Why? Well, the bank I work at, I'm blessed that they give me licensing in all 50 states. But the other thing they did is they said, Dan, what do you need to be successful? And I said, programs and rates. We went out there and we got almost 40 different lenders we're working with right now. Why? To help you guys out. So put in your mortgage information up there if you want me to track rates for you. So if your rate hits a certain percentage rate you're looking to refinance, I'll call you. I'll text you. Even if say, Dan, I'd love to save $300 a month, $400 a month. When it hits those, we'll reach out to you and call you. If you're looking to buy a house, you're in good shape. I don't think really rates are going to do anything in the next few months. If you're buying or looking to build and you're going to be completed at the end of this year, I think you're going to be in good shape as well, because my expectations for this quarter and actually this year is going to be rates about 5.875 to 6.25. We keep teetering on that high end right now, folks, but trust me, this is basically the peak that we're going to see. There's really no catalyst here to drop us go any higher, but there's really nothing here to drop us any further as well. So if you're looking to refinance, check it out. If you're looking to buy, check out those calculators calculators down below. How much can you really afford at these rates? You might be a little surprised. So thanks for watching, folks. If you haven't subscribed, please do so over there. And I will be back later this evening at 6 o'clock, 6 p.m. Central Time. Join me live. I'll be all over the place. YouTube, Twitter, Rumble, all those places. Ask me any questions that you have when it comes to real estate, mortgage rates, and maybe how much you can afford. So folks, hopefully now you understand a little bit more about what's going to go on with these and the whys behind it. And if you need to know a little bit more, please subscribe over there or go to our website and reach out to me with any questions that you might have. Thanks for watching. God bless, and I'll see you later this evening with any of those questions that you might have. Have a good one. Bye-bye.